Hey everyone, how are you doing today? Today, well, I guess I just ate, so yeah, that explains why I'm late. Sorry. Um, but jumping right into it, interest rates. So I guess, yeah, people were right about interest rates being, I guess, lowered. But as for whether it's going to continue to go any lower, like the next couple meetings, I guess time will tell. But if you didn't watch the FOMC meeting, so the Fed meeting was on the 17th, I believe. Yeah, that was like Wednesday and Thursday. Um, Jerome Powell spoke about basically, okay, so I have my notes, right? I think it'll be easier to show you than to just talk about it. So let me pull it up real quick. So I was listening to what he was saying earlier. So earlier well, at least during the meeting, when I was listening to the recording earlier, it the things that popped out to me were the things that we've been discussing the past couple of videos. Unemployment rate remains low, um, though he says it's edged up, and so there are things going on with unemployment right now, which we also discussed last week. But when I think about it, like, okay, so actually, let me not get ahead of myself. So I'm just going to continue reading. So it says here, um, inflation has risen based on this transcript, remains somewhat elevated, and so the interest rate has been lowered by a quarter percentage point. Now, I did a video like last year called, I think it was called What Are Interest Rates and Why Should We Care? So if you don't know what like lower interest rates mean, of course, we'll go over some examples of how lower interest rates can, like, you know, affect our day to day spending and activities. But I really think that if this is like a concept that you need to refresh on, or maybe need some in depth, you know, research on, then I recommend you check out that video, which I think, yeah, I should be able to link it to um, that video. So, say for example, if you want to, when you stick around and it should show you like the options. We'll see. But as for what a quarter percentage point means, let me look that up. Because, while we're on that, um, like last time, we were talking about like the data behind unemployment. And I realized something after the live stream had ended, which was this is just my opinion. It just seems to me that President Trump pressured the feds to lower the rates to not just stimulate like spending and the economy, but also everything that lower interest rates um, could encourage, basically would support everything that President Donald Trump seems to be like I don't know, for lack of better words, promoting right now. So, like, we've discussed data centers, AI, the AI race, and so it would make more sense that with lower interest rates, it would make it, I guess, more, it would create the right environment for people to invest in those types of endeavors, right? In American businesses, but I think especially in businesses like AI. And even though, like, there's the conversation about whether AI is out to take people's jobs or not, um, that I think what these data centers and AI might provide are more jobs in tech. So I see that being a possibility. I can see how, like, the hiring might look really slow right now. And I guess in the more, I want to be careful, but hiring might look, for example, um, and I'd rather have data to back this up. But let's just say, like, other areas, other industries, like, those opportunities may look like they're dwindling down, but at the same time, like, the direction things are going, if they do support what President Trump is trying to do, in regards to, like I said, AI, investing in American businesses, then that would be more opportunity. That would mean more opportunities for businesses, like business owners, people who want to be entrepreneurial. And I don't know what the video is called. I don't know this guy's full name. Um, but basically, if I can find the link, then I think I'll consider this. But in the video, the guy makes a really good point. His name is Brandon, by the way. But he makes this really good point about um, certain I don't know if it was like the big beautiful bill that he was commenting on, but just seems to really support anyone who wants to be an entrepreneur, anyone who wants to open a business. Um, and yeah, like, that just seems to be the goal here. So when I was listening to the Fed meeting again, um, of course, I mean, like, I think we all know that the labor has been impacted by, the things going on with immigration. Hey, Gabrielle, by the way. And that's why, like, I'm not too hung up on these numbers, because yeah, even though, like, that's been reported, again, like, I don't know how these numbers are, um if these numbers really, how accurately they reflect what's going on, like, with immigration, um for one. And yeah, I need to gather my thoughts. But Gabrielle says, love that. I'll have to look that bill up. Thanks for the info. I mean, yeah, I should look at that bill myself. Like, yeah, it's just the reading for me. But, um, but going on, like, just moving forward, basically it says here that, like, I guess the Feds have their own projections for GDP. Let me see here. So projection is 1.8% next year. Which is like, I don't know if you noticed in the top part of the document, it says it was like, so it says GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5%, excuse me, last year. So basically, now I don't know if the projections are based off of the interest rate cut from Wednesday. Yeah, but it looks like either way the goal was to bring it back up to 2%. And yeah, we already discussed the payroll. Wait, not did we? I might be confusing that for the employment data that we discussed last week. But anyway, I thought it was interesting too how it said, because I'm reading it on my end, right? It says, so when Jerome Powell was speaking, it says at today's meeting, meaning Wednesday, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Now, maybe I might consider looking into that. But anyway, higher tariffs have begun to push up prices, and some of their overall effects on economic activity and inflation remain to be seen. So it's just interesting, just seeing both sides of this. Like, like I was saying, what it looks like President Trump is trying to, like the environment he's trying to create to support, perhaps potentially, this is not like, legit, like, I'm not going to put words in anyone's mouth. This is just strictly my opinion. Just to create the right environment for investors to invest in America. And again, perhaps open up, opportunities in AI, just so we can stay ahead in that AI race. And then on the other hand, like I can see how Mr. Powell is like, just based off of this information that I'm reading, right? It just seems like he's just focused on basically what's going on in the economy right now. But like basically what I'm telling you is just like the extra part of it, which I think, are the things that presidents should be focusing on. And then this next section here says the median participant projects. I'm guessing that's referring to, okay, he says, in our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, 3.1% at the end of 2027. So Let's see here. So yeah, basically according to the St. Louis Fed, stlouisfed.org, federal funds rate is the interest rate at which depository institutions trade federal funds balances held at Federal Reserve banks with each other overnight. So that's what that means. And then it says when a depository institution has surplus balances in its reserve account, it lends to other banks in need of larger balances. In simpler terms, a bank with excess cash, which is often referred to as liquidity, will lend to another bank that needs to quickly raise liquidity. The rate that the borrowing institution pays to the lending institution is determined between the two banks. The weighted average rate, for all of these types of negotiations, I don't know where that accent came from, is called the effective federal funds rate. The effective federal funds rate is essentially determined by the market, but is influenced by the Federal Reserve as it uses the interest on reserve balances rate to steer federal funds rate toward the target range. I feel like I need to process that myself. Like I feel like I read that, went over my head. So if you feel the same way, you might want to rewatch this part of the video. Yeah, I might. Yeah, I need to process that. But let me see here. And then I had something else I wanted to share as well. Oh, that's what it was. But rather than sharing that, because it's my notes from the last time we talked about, well, basically the video I mentioned earlier, like what are interest rates and why should we care? Basically, I just thought, I need a refresher myself. Okay. Now, basically, what lower interest rates mean. Okay, so basically, we've heard news about, the housing market. I I guess it depends on who you're listening to. I honestly skim past some videos, but it's just the environment for the housing and real estate the past year didn't really sound too great. And I don't really feel like I want to go into that because I feel like I don't know too much about that to really say. So I'm just going to focus on now that interest rates are lower. What that means is it's going to create an environment that's going to encourage people to buy homes, vehicles, now that loans, mortgage, car loans, personal loans are going to be like affected by the rate cuts, right? And now it's also going to create an environment that, so basically, I'm going over how it affects our everyday purchases. So, larger purchases, we might see more of those. And let's see here. I think basically it's going to encourage people to spend more, which is what we need because with what we discussed last time, the dollar, the strength of the dollar, like someone else said that it was getting weaker, but Either way, we all know that the dollar depreciates. Therefore, if you save it, then it would be a really good idea to become financially literate, to know the best way to save during this kind of time. And what vehicles might be best for you, which, by the way, um, I'm a licensed financial professional. So if you want to book a call, we can discuss your goals and I can connect you to another financial professional and we can discuss that further. But for this live stream, everything is just, this is news that I'm sharing with you and commentary. So it's mostly for educational and entertainment purposes, even though today it might not feel that entertaining. However, going back to everyday purchases, how interest rates affect our everyday purchases. Um, Basically, it's going to also boost, like, I'm just strictly talking about how lower interest rates can create that environment for people to make more discretionary purchases, which, of course, like going over my notes here, um, so that's going to help with retail. But yeah, like I was just thinking too how it would also really help because it just seems like, with the news that we've been discussing lately, people looking at gold seems to be like a trending thing lately, within the past few years, but more so recently. I feel like the lower interest rates really is something that we needed. I feel like when just based off of those trends, it just seems like people just don't feel confident or um, secure in this economy. And considering how this is something I've learned the past few years too, by the way. Like I was saying, money, if you keep in one place, it's going to depreciate. But the economy also gets its value from money circulating. So you don't want money to burn in your pocket, obviously. Um, and I want to be very careful because there's some things in my notes which I feel like if I don't want to I don't want to say anything recklessly because again, this is like, although I am sharing news with you, it is still pertaining to finance. And I really want people to be very careful when they're listening to like what I'm saying because I rather them actually, they need to know what they're doing or they need a financial professional to make their own decisions on what they want to do with their finances, whether that's investments or, how they want to go about meeting their goals, right? So, oh, hi, Kingdom Minded Advancers. Good to see you again. I was just sharing like what lower interest rates could mean for, everyday purchases, like just how most people actually um, might be impacted, you know, just seeing how at least the past few years, like it just seems like everyone has just felt like it just seems like everything these past few years, especially since 2020, like the prices just seem to keep going up. Um, and I was just saying that the interest rate cuts could support everything we need in this economy. But I'm curious for those of you who, well, you, Gabrielle, have been here longer um, in the live stream. I'm curious, like, what would you like? Um, how do I say this? Like, for example, I'd like to see, um, let's just see. I need to process my thoughts here. I really would like for there to be more support for business owners, um, whether that's tax wise or just more incentives to start businesses, just in my opinion. Um, I really do think that, like I was saying, when President Trump got back into office, I really do think that we need more American businesses. Now, I understand, like, having, you know, operated a business myself, I understand, like, of course, you want cheaper costs, right? You want to make sure that the costs don't, it doesn't break even with, operating a business, obviously. And because if we were to go back to like all American, like supporting all American businesses, I can see how upfront, like things are going to be pricier. Just because I feel like in general, I feel like we've depended on imports for far too long, in my opinion, to the point that it would cost more to produce it here. Although I'm not sure how it correlates exactly, but I do feel like it's kind of like when you're proficient at something, but you stop doing it for a while. Then when you get back to it, now you have to invest more time in it, in that hobby or that skill. You have to update your resources, your equipment, for example. That's how I think of it, like. But that's my take. I'm curious what you guys think. Um, what do you want to see? Like, what changes do you want to see in the economy now that interest rates are lower? Um, and yeah, type that either in the chat or in the comments. But if you can type that in the comments for those of you who will be watching later, that'd be great. Just because I really do think that, actually, yeah, YouTube sees that there's engagement, and I think they see the value in that video through that engagement as well. So if you can type it down there, that would be great. But yeah, like there was some other things I was looking into for our discussion today, like but I'm not sure like if I really want to get into it. I feel like for now, um, I'm debating if right now would be a good idea to end it here. Hmm. Yeah, I think I'll wrap it up for tonight. But if there's anything you took away from this video, I encourage you to, again, type it in the comment section. Maybe, you could share maybe some takeaways, what stood out to you. And yeah, we can chat more there. But if you know of anyone, by the way, who you think would benefit from these types of videos, then you can go ahead and share this with them. I highly encourage you to do that, by the way. I'm also on other social media platforms. You can find me on the handle at Diane Bay Finance. I'm mostly on all the major ones. And let's see here. And also, if for those of you who've been watching my videos, I'm looking for feedback on, like, if you think I'm going the right direction with this channel, because I think so far, I think me doing like newsy type videos seems to be a good fit for now. I realize that perhaps like my other videos, like, you know, I'm still learning YouTube, right? I'm still learning about social media. But I realized that I probably did too much at the beginning just because, as a newer channel, I think it's, for now at least, it might be a good idea to focus on like just sharing. Well, how do I want to say this? It's because like I want to be careful what I speak, right? So how about this? Yeah, just let me know what you think, um, in regards to whether I'm going the right direction with like, the last few videos at least, where I'm like sharing news, right? And then we'll go from there. I personally think that this is a good decision, but of course I want to hear your feedback because you're the one watching this. So I want you to actually get some value off of these videos and to learn something. So yeah, well, next week I will be on Friday around the same time. So yeah, um, let me just think about anything else I want to say before I wrap this up. Um, I think that's it. Well, until then, enjoy the rest of your night, enjoy the weekend, and God bless. All right. Talk to you later. Bye.